Fintech companies have been gaining significant traction as more Nigerians are considering them for financial services, particularly when it comes to loans. However, traditional banks remain a dominant force, especially in the areas of loan offerings and interest rate. Despite the competition, many Nigerians continue to trust banks over fintech platforms. The report.
The financial landscape in Nigeria has undergone a significant transformation in recent years. Fintech companies are emerging as a major force, reshaping how Nigerians access financial services. Leveraging advanced technology, these companies have streamlined the loan application process, offering a quicker and often more convenient alternative to traditional banking. However, despite these innovations, many Nigerians still prefer the traditional banking system when it comes to borrowing. Traditional banks, while often criticized for their slow processes and extensive documentation requirements, offer relatively fair interest rates and maintain a more discreet approach when customers face difficulties meeting repayment deadlines. In Lagos, we spoke to a number of citizens about their thoughts on fintech companies versus traditional banks. Here is what they had to say.
These are banks, they are more trusted than all these floating banks. And when you talk about all these local banks that are talking about, that is when you go back to the old days where we have traditional banking. The rate at which those traditional bank or traditional the old people, the rate at which they charge interest then wasn't as it is now.
Their interest rate for the normal banking, the whole banking ways, their interest rate is so minimal to this fintech people. Can you imagine someone borrowing 10,000 naira and you're asked to pay the sum of 3,000 naira in 7 days? So, like 30% interest rate on that. Bank will never charge you that kind of money.
The fintech, they are actually the fastest way you can actually apply for a loan because their customer service, like I tell you so, they're actually fast. But when you go for all this traditional, it takes time. They ask for like your credential, your BVN, even your own mothers, like the way they ask for the credential, like different things, but they're actually slow. But at the end of the time, like at the end of your loan, like the loan term, the traditional can never go to your contact. They can never embarrass you.
I think it's good for someone to collect loan, but the process involved in collecting their money back, if a particular person fails to meet up with their requirement, I think it's very embarrassing. Imagine someone that cannot be able to meet up. At the end of the day, he or she will be exposed to many things that even ordinarily you are trying to cover up. You have to use some kind of force on your property or on your relative to harass you, to embarrass you by collecting their loan back, and which is not ideal to other banks.
As the competition between fintech companies and traditional banks grows, fintech platforms must focus on improving customer service, ensuring robust data protection, and avoiding practices that could embarrass customers. Offering fair interest rates and maintaining strong customer trust will be key to their long-term success and customers' retention.